Welcome back everyone to another market recap. In this video, I'm going to be reviewing the markets for yesterday, December 24th, 2024, which was this day right here. We're going to start off talking about the higher time frame just a little bit. That's something new I'm going to start incorporating into these recaps. I think it provides a lot of value as the higher time frame plays a lot of role into the trades within the day. If you're new to my channel, my name is Jake. I make daily market recaps and videos on ICT concepts as well as trading concepts. So if you like that type of thing, definitely consider subscribing, leaving a like, and checking out my completely free Discord. The link to that is in my bio. With that, let's talk about the market. So on the daily chart here, well actually first, you'll note that this right here is a weekly fair value gap. A fair value gap is a gap between the low of the wick prior to a candle and the high of the wick after to a candle. It's this candle body's area in between here. That's a weekly gap. So these are gaps in highs and lows, and they will often be respected as support. You can see the market aggressively wicked into this gap and then closed back higher. That showed that the market was respecting this area. As well, you'll note here that not only were we respecting a weekly fair value gap, but we were also respecting a daily breaker block. That's that highest up close candle right here, and overlapping with a daily fair value gap. So we are moving from a higher time frame fair value gap possibly to all-time highs. So the market moves from fair value gaps to all-time highs. So within this price leg, ideally we are possibly looking for longs. Now, assuming that bias does not change up here for some reason, but that was my higher time frame analysis. I'm doing higher time frame analysis every single day now, so hopefully that's going to help me with my intraday trades. As well, you'll note that this is a pretty good wick into this gap. It's not like we closed below. It's an aggressive wick into this gap that ran below this consolidation. So the way that the candles react to certain key levels like this matters a lot. All right, let's jump into the lower time frame now. Going down to the lower time frame chart. Actually, I want to also note that we had a 2-day CRT candle form right here. So we have this giant, huge candle range on the 2-day chart. And then we close back within that range here. And when this happens, you can anticipate us to go to the midpoint of the candle range, the previous candle's range, as well as sometimes the opposite side of the candle range. So, whoops. So that gave me a bullish bias going into yesterday. You can see that here. Anyway, measuring out that candle range midpoint, this was one of my draws on liquidity. This midpoint here, I figured that we would at least possibly draw to this. So I'm marking that out. 2-day CRT midpoint. As well, we had our our high of the week. So this was the high of Monday. So this was important as well. I figured the market was drawing here. High of the week. And then make that a different color. Okay, dropping down to the lower time frame. So figured the market was drawing up to here. You'll note that we did not actually quite get to high of the week. So to me, the market was still drawing here. And the first thing I noticed you could have taken, I didn't take it because the volume was pretty low here. But I noted that right when I got on the charts, we swept out this low, and I knew with a high probability we were drawing to this high of the week. So you could have possibly, once this broke structure or CISD or whatever you want to call it, you could have possibly entered on this BPR here, which would have been a nice entry for a like 2 or 3 to 1 trade here. Stop loss below low, targeting high of the week. like essentially a 3-to-1, which would have been really, really good. Now, personally, I wouldn't have taken this because of the low volume, but with your higher time frame bias and conviction, you could have taken that. Then as well, I would have probably just taken that on one account though, just because of the low volume. Then you'll note that we pushed back lower here. And another reason to be bullish going into today was, look what happened here. We had a, see if I can find it. We had London push into a key level, this new day opening gap right here. So once we get a reaction off this new day opening gap, you can say, oh, London pushed into a key level. We're possibly going to have a London reversal New York continuation day. So London pushed into this new day opening gap. So that led me to possibly think we were going to have a London reversal New York continuation day. So that was my daily profile bias going into today as well. I'll talk about the weekly profile really quickly. On the weekly chart, once again, we're expanding away from this weekly fair value gap, and we pushed into this 4-hour gap here. That 4-hour gap being the key level of the week, at least that's what it seemed like to me, for possibly a bullish classic expansion week where we expand towards our drawn liquidity, which is all-time highs. So we got to push into that key level on Monday, and now we are expanding to the upside. So that's possibly the weekly profile, but we'll just have to keep playing it by ear. All right, so you'll note that we had all of these session lows below, but I was super bullish, so I did not anticipate us to go run these. I noted it could have been a possibility, but honestly, I was bullish, so I wasn't necessarily expecting us to go come back and run these lows. If it happened, then I could have taken a trade to the upside off of it, but I wasn't anticipating it just because of how bullish we were on the higher time frame. All right, so now within here, I'm looking for a trade. You'll note the bottom right here, this low, was exactly at this 1-hour order block. Check this out. I'm marking out this 1-hour opening price here, drawing this out. You can see we bottomed right at this 1-hour order block, which is really, really interesting. So that's the bottom of this lower time frame model here. This lower time frame model where you have sell side of the curve, buy side of the curve. So what I was looking for was us to go down during New York before expanding higher to the upside the rest of New York. And so I was looking for this exact thing, but what I should have done is I should have had my hourly key levels marked out, like this 1-hour order block. If I had this my 1-hour key levels, like this 1-hour order block marked out, it would have been a lot more clear what to look for a bottom of a buy model to go higher. Instead, unfortunately, I was just looking for whatever I could get, and the first thing I saw was this 15-minute gap. So I took a minor loss earlier in the morning before eventually capitalizing on a trade later on in the morning, which was a 2-to-1, which was really, really good. But this first loss was a terrible trade. Essentially, let's just talk about it real quickly. So I'm going to pull up my journal and show you guys. So we filled this 15-minute fair value gap, and let's mark this out here, 15-minute fair value gap. We filled this 15-minute gap, and I noted that this was the hourly candle was at its low here. And once we started getting candle body closes higher, I was like, okay, all right, we're holding this 15-minute fair value gap, and we swept out this low. Here's the thing, right? We still have an external gap here, and we haven't touched a higher time frame key level. So a big lesson from this is you honestly want it to be, when you're looking for a buy model to form from for like a London reversal New York continuation day, you really want it to form at a 1-hour or higher key level. This 15-minute fair value gap, I needed to wait for this 1-hour order block, or else this was not valid. And so you'll note as well that we had this external gap here. So I tried to enter off a 15-second breaker after filling this 15-minute gap. And so once we close a candle body above this old up close candle, I tried to enter right here. And then I immediately got stopped out. And I was like, oh, yeah, that was stupid. Because why? We have this external gap here. So you have to really, really be careful and understand liquidity. Like, yes, we had good low resistance liquidity. Yes, we came up and filled this gap. But understanding the market is not going to go until it's ready and it's completed its sell side of the curve. Here, we still had to go run down all the way to this 1 hour order block. And then once we tapped into that 1 hour order block, okay, that's go sign. Once you see that perfect reaction, okay, that's perfect. That's go sign to go long, because you have that confirmation. I thought the 15-minute was enough confirmation here, but in the future, I'm really going to be looking for 1 hour or higher key levels to be confirming the low of these intraday like market maker models here. So, and if I see this in the future, I'm not. If it's a 15-minute level, I'm kind of gonna ignore it. I want to see these hourly levels get hit, personally. So anyway, one final sell side purge into that, into this 1 hour order block, and then as well we're sweeping out these lows as well. And now I'm like, okay, great. Now I'm pretty confident that this is a buy model here. So I re-entered. Now we still have this external gap, unfortunately, which was kind of frustrating. So you maybe just wanted to be a little bit more patient, but I was content with taking this, so I took this. Once we got a 1 minute close above this old breaker block here, so these two candles together are a breaker block, since we have a low, a high, a lower low, which swept out this low and this low, and then a higher high. Once you get this close above, that validates this as a breaker block. You can enter on the close above. That's exactly what I did. And stop loss below the breaker block here. And I simply just targeted the 2 to 2.5 standard deviation of this. So I'm going to measure this out here. Or actually, no, I did. Yeah, so I simply targeted the 2 to 2.5 standard deviation of this, which was perfectly lined up with this 2-day CRT midpoint, which was perfect. And yeah, this was a nice 2 to 1 trade. Unfortunately, I took that 15-second breaker block loss, which was just not a trade I should have taken at all. Like, you can enter on 15-second entries, but they need to be after, like, you get the 1 minute confirmation and the 3 minute confirmation or whatever. Unfortunately, we did not have that yet. And so if I was to retake this trade, I still probably would have entered here. But let's say I missed this. Let's say I missed this breaker getting formed, right? Well, what you can do, actually, I'm going to make a short form video on this. But you can do time frame refinement. So we got a 1 minute close above this breaker block. But let's say you're like, I'm not sure. We have this external gap. I want to wait. So we go up. We don't continue higher because we have this external gap. Okay, now what you can do within this is look for an even lower time frame entry. I also forgot to mention we got SMT with this low here. So we got SMT with YM. Okay. Then on the 30-second, actually on the 15-second here, after we already got a 1 minute entry, so now we are looking for an even lower time frame entry to get an even more accurate trade. So we pushed into this 1 hour level. We know this is a buy model. We know we have good low resistance liquidity here. We know this external gap has been taken, so we are pretty set to go long. Now that we got this 1 minute change to delivery, but we're just looking for lower time frame confirmation. And so what you could have seen here is we had this breaker block overlapping with this fair value gap here. So boom. So now you're getting this, you get entry right here on this breaker fair value gap, stop loss below the breaker, and this would have been a lot higher RR trade. Personally, I would have wanted to wait for a lower time frame confirmation off of this. So what I would have done is, once this up close candle, this old up close candle got closed above, or maybe you'd want to wait for this one to get closed above. Either way, Once that happens, let's say you wait for this one to get closed above, because this is the highest up close candle. You wait for that to happen. You enter long here. Stop loss below that. Simply targeting. Stop loss below the breaker. Targeting that 2-day midpoint. This would still be a 2-to-1 trade. But if you wanted to do it off of this one on the 15-second, you get a candle body close above that. Boom. So you get a candle body close above this highest up close candle. Stop loss below this breaker block here. So the series of up close candles. This is how I would do it if I was refining it to the lower time frame. And then you can get a 3.3-to-1 trade instead of a 2-to-1 trade. So that's pretty cool. Just like refining time frames as well. We got S&T at these lows. I forgot to mention that. This is the power of using market maker models to frame trades. So you get a lower time frame entry off of the 1-minute entry, which we already had. Pretty sweet. Good low resistance liquidity. And you can see we go run straight up to that 2-day CRT midpoint. Unfortunately, this was after the macro, but this still would have worked. And yeah, so pretty cool. So anyway, I was anticipating this move down lower into this 1-hour order block here. I just kind of messed up my entry at first, and I'm just going to keep getting better with that over time. That's okay. But you'll note here that if you measure out this manipulation move into this 1-hour order block, measuring this out here, that 2 to 2.5 marks this first area where we kind of hesitated a little bit. It's right above that 2-day CRT midpoint. And then that 4 to 4.5 marks this final top. So that's pretty cool. Alright, so now as well, I noticed that if you wanted to take a trade on the right side of this curve here, you could have waited for this 1-minute breaker block to get closed above right here. Once this 1-minute breaker block got closed above, that validates this breaker block as being valid, and then this is overlapping with this 1-minute gap here. So since we already know that this is a buy model on the higher time frame, we're good to enter this without like since we know this is a buy model, we're good to enter this. And I would simply target that 2 to 2.5 standard deviation. So where was that? As well, that's the CRT midpoint. This would have been a 4-to-1 trade, which would have been really sweet actually. Really awesome trade. 4-to-1. As well, if you targeted the 4 to 4.5, this would have been a 9-to-1. Now personally, I'm not taking 9-to-1s right now. I'm just trying to get better first, but I just want to show that like once you get really good, eventually you can get to the point where you could possibly take those 9-to-1 trades if you were willing to take on that kind of risk. So that's really cool. And then you'll note that where did we go to? Where was the high of the day? Check this out. The high of the day, if I turn on the daily stat map and then turn on the historical sessions, check this out. We went right to this daily distribution level on the stat map. So the stat map is essentially the statistical expected manipulation and distribution on a bullish day, and then manipulation and distribution on a bearish day. I've explained it in other videos, so go check those out. I don't want to go through it all over again right now, but we went right to that statistical distribution level, which is really cool. And then same thing, actually, the session one was also right here as well. So with all those lining up, you could have targeted that and gotten a 9-to-1, which is really cool. All right, so now, all right, then after we hit this 4 to 4.5 standard deviation, we're still bullish. Remember, the higher time frame is expanding to the upside. So we're still looking for trades to the upside. And let's see if I can find the next trade here. So once again, this is time frame refinement. We get on MNQ. I don't know why we didn't have it on NQ. I'm actually kind of confused about this. So if anyone knows, let me know. But on MNQ, we had a new week opening gap at this low, but not on NQ. I find that really strange, but that's just what happened. So there's that new week opening gap, and this was on MNQ, just for reference. Or maybe it was a new day opening gap. Let me see. Yeah, it looks like it was a new week opening gap here on MNQ. And so, first possibility is once we close above this breaker, this up close candle on the 3 minute, you could look for a lower time frame entry within here, or you could just simply enter off of that. Or same thing here, once we close above this breaker, you can enter off of that, stop loss below the breaker, or you could look for a lower time frame entry. So let me show you what I mean. So there's this 3 minute breaker delivering from that new week opening gap. So one possibility is you measure out standard deviations of this, and you target the 2 to 2.5. Entering on this formation of this breaker here, stop loss below the breaker, and this would have been a 3.18 to 1, right? That would have been pretty cool. And then you same thing with this one. You enter on the candle body close above this old breaker block, and once again, we know this is a lower time frame buy model because we reacted off this new week opening gap. Now, I don't know why it wasn't on NQ, but it was on MNQ. I'm still trying to figure that out. Anyway, this one would not be as high RR, but this would have worked 1.5 to 1. But once again, time frame refinement. If you wanted to do time frame refinement here, like let's say we closed above, but that wasn't good enough for you. The RR was too bad. You just be patient and you wait, and you actually get SMT at these lows here. No, we actually had SMT here as well. So we have SMT here. So pushed into this new week opening gap. This is also a fair value gap. But remember, the higher time frame is bullish, so that's why we're framing buy models right now. The higher time frame is bullish. And then within this, we got SMT within this breaker, and now you can identify a lower time frame entry, which is this 30-second inversion coming off of this breaker block here. Right there. Boom. 30-second IPG. And here, now you have a lot better RR trade. Your stop loss goes at the low of the old candle here. So boom, like that. And then now you get a lot better RR with this because you refine this entry to the 30-second. Stop loss below here. Targeting the 2 to 2.5 standard deviation. This would have been a 4.88 to 1. Unfortunately, I actually did take this, Unfortunately, I got stopped out at break even here and did not work out for me. I'm wondering how I could have prevented this. Honestly, I don't know. I think one way to do it is instead of going for such high RR, you could have just measured out this and taken off a decent portion at this 2 to 2.5. That way, you lock in a 2 to 1 here, and that would have been awesome. I mean, you can't be complaining with the 2 to 1. So that's one way to avoid that break even. And you could have just held it, but I'd probably go to break even here most of the time because if you're expanding up here, you would not expect us to go back to break even. But if you did hold this would have worked out. Anyway, break evens are not losses, so you can't be upset. Then let's look at what else we had here. So let's talk about earlier in the morning. So earlier in the morning, we had a lot of consolidation, but you'll note that we actually had a decent setup that occurred. Let's see. Yeah. Let's go back here. So here you have a pretty nice accumulation range. And then we dig below this accumulation range into, what is this? And remember, London already pushed into that key level, so we're assuming that the market's going to be expanding to the upside at this point. What is this? This is a breaker block here, this highest up close candle. Boom. There's your breaker block. There's your fair value gap. That overlapping area, maybe you could even enter long there, but personally what I would have done is I would have framed a lower time frame model going out of this. So here you have accumulation, manipulation here. You'll note that we had we had a 2-minute inversion. So maybe you could have taken this 2-minute inversion, delivering from this. That's the first way you could have approached this. That would have been fine. Simply, here I would not go to break even here because you have such good LRLR. I would simply target the other side of this range. With this good of LRLR, you don't move break even until you hit here. I wouldn't do it. I wouldn't move break even until you hit here. But this is a technique where you use 2 candles as one. So there's your 2-minute IPG. And then you enter long on the close above. Stop loss at the low of this old candle here. And this would have been a nice 1.7 to 1. Now, you also could have measured out your standard deviations of this. And targeted the 2 to 2.5, and that would have given you a 3 to 1 risk reward trade. So that's pretty cool. But it's really awesome how you can frame lower time frame trades using higher time frame confluences. Like this is a breaker block fair value gap. Okay, we get an inversion out of it. All right, let's enter off of that, right? And it was clear AMD as well. So accumulation, manipulation, and then distribution to the upside here. So there's your distribution. And yeah, we would go to that 2 to 2.5. Let's measure that out again. Right to that 2 to 2.5. So that's pretty interesting. And then as well, let's see what else here. Oh, I remember what else. This was also a new week opening gap as well. It just keeps getting better. This was also a new week opening gap, which is just like an awesome additional confluence, right? Super, super nice additional confluence. And then once all of this builds up, actually, you'll note that within this, if you wanted to, you simply could have waited for, I'm trying to figure out how I would do this. You could have waited for this 15-minute breaker to be validated, right? Once this closed above, you could have waited for that and then entered off the close above this. And same thing. But it's just like, it's nice because you can get really, really accurate with these trades as well. Like let's say this 15-minute breaker block closed above. That happened at 7:45. Okay, going into lower time frame here. Maybe you find a lower time frame entry within this, right? Maybe you find a lower time frame entry off a lower time frame inverse in here or something, you know? So that's the nice thing about time frame refinement is you can get really, really nice high accuracy trades. Let's see. Then we'll go over some PM trades as well, but pretty cool how like identifying AMD is so powerful. Like this is obviously a manipulation move because of how fast and aggressive we wick into this new week opening gap. So the way the candles move into key levels and move out of it matters a lot. It matters a lot. All right, going to PM. Let's talk about PM. Maybe there was other trades you could have taken. I think I covered most of it. I'm just looking at everything here. I I think I covered most of it. All right, we're gonna go to PM session. First, we have a trade from Jan. So we had a trade where he, let's see, he took a short. I'm personally not taking shorts because I'm super bullish, but he took a short. We had a sweep of this high, and then we have good low resistance. We have good liquidity down here. Good liquidity. So on this inversion here, you could enter off of this as well. You'll note. So this is a 1 minute inversion. And yeah, we closed below that. Now your stop loss can go here, or maybe if you want to put it higher, you could. Typically your stop loss goes at the high of the old IFG candle. Here I'd move just a little higher because it's kind of tight. And then yeah, here you can just target the end of this low resistance liquidity here. That'll be a 1-to-1. I believe Jan targeted this low here. Personally, I would have just targeted the end of this low resistance liquidity because I can say with a high conviction we're going to go get that. I don't know as high a conviction we're going to hit this, but this would have been a 1-to-1. This would have been a 2.5-to-1. And then if we sweep out, so not only did we sweep out this high, but we swept out this high. And so really nice trade. And then lastly, this is something I noticed towards the end of the day, but we got SMT with this low. Now, Jan did take another trade in here, but I'm going to have to pull it up. It's just going to take a while, so I'm just going to move on to this last thing here. I think we got SMT with this low, or maybe it was this low. It was one of these lows here. And then you'll note these really tiny BPRs here. So this is a BPR, this is a BPR. And the market held this. And one reason it held this is just because of how bullish it is. So if we're just trying to take whatever long setups the market's giving you, like maybe you enter off of this 30-second breaker for value gap delivering from the BPR, right? Because now you've just framed a buy model. You have a good manipulation leg here. And you can see we go right up to it. This was, actually this didn't happen until later on. So, but you still could have taken this. I guess you probably want to exit out before market closed here. Otherwise, yeah, so you'd probably take all off because the market ended up closing early because it was Christmas Eve. But yeah, maybe just target the -1 here, and that's at 3.3-to-1. Pretty crazy how powerful time frame refinement is. I'm gonna make a short form video on that soon, but yeah, as well, maybe you could have entered off the BPR, but I'm learning that the more you can frame a lower time frame entry delivering from a higher time frame model, the less you're gonna lose, the more accurate you're gonna be. So personally, I probably would have taken this one, and then you could have even got even better RR as well. So but yeah, pretty cool. And you can see how this is a buy model here. So boom. And I would normally talk about trades on Twitter, but I didn't actually see anyone I didn't see any trades on Twitter. I just didn't see any. So if you guys have any trades you ever want me to review, definitely send them to me. But all right, let's talk about the other trade that Jan took, because I think it's important to cover everything. Okay. Here's this other trade from Jan, and delivering from a 5-minute for value gap. Oh yeah, this was a good trade. I think this might have been during PM, which is why I didn't see it. But I am going to start trading PM now, so I'm not going to miss these PM trades anymore, which is really nice. I'm going to make sure I don't miss these PM trades. But yeah, this was a good inversion because we took out all this sell side into this 5-minute gap, and we have good LRLR. This was really high quality. I should have caught this, unfortunately. I don't think it was on the charts. Oh, I was. I don't know why I didn't catch it then, but I should have. I should have caught it. Anyway, good inversion here. Oh, whoops. On the 1 minute. And yeah, once again, you can just tell when it's AMD because you'll have a accumulation range, manipulation into a higher time frame gap. So once again, this is a 5-minute gap right here. And then you can tell when it's manipulation because it'll aggressively wick into that and then close back higher. And so you would have entered here, targeting this high, or maybe higher depending on if you did measure out standard deviations. So, all right, with that, I'm gonna leave it off there. I'll see you guys in the next one. Bye.